Hello and welcome to another update video on FET. On the FETCH.AI chart, we are still looking at further potential upside. This chart is still, at the moment at least, in a bullish structure, given that we have a 5-wave move up from the April low. So I am overall looking for higher prices. Unfortunately, there is no very clear bottoming structure here yet. That means you need to be careful. The price might still be in the B wave there. The standard support area I am tracking is between 43.3 cents and 66.2. In contrast to other charts, FET has not yet reached this support area. Feels nearly as if there are two different chart groups right now. The one that has only formed very shallow pullbacks after the top in May, and others actually formed deeper pullbacks and entered the support area last Thursday and bottomed there as well, and are now reversing out of this zone. So you just need to be ready in case the entire sector starts to rally to the upside, which is what many altcoins actually suggest, or at least they allow for this interpretation. Well, see, the market might just take the direct route and FET could join. But then we would want to see, for further confirmation from an analysis point of view, we would want to see a 5-wave move up from a significant swing low. So let us take a look at the shorter time frame. The shorter time frame isn't super clear to me. So whenever the smaller time frame isn't super clear, it means that from a trading point of view, it makes sense either to avoid it or just follow the larger pattern. Okay, you don't need precision on the smaller time frame if the market doesn't make it available right now. What I can tell you is that the decline from the May high is a 3-wave move down. Again, we're overall looking for higher prices. However, the depth of the pullback is not very, it's not a very deep pullback. So it opens the door to different interpretations. Not very clear on the nano level. Doesn't mean it's bearish. It just means it's not super clear. We have a 3-wave move down. That could be the A wave, of a correction, of this correction. We're now dealing with the B wave, and then we can get a C wave down. So that would be the pathway into that support area I shared with you. But if the market can break decisively above 95.3 cents, I'd say it becomes more probable that we are in one more upside extension of the A wave. So the A wave, which presumably topped on the 23rd of May, and that is not high confidence, would in this case still be unfolding. So it's not high confidence because of the shallow pullback, and really the structure from the May high is a bit ambiguous. What I can tell you, it is still potentially bullish because the pullback was in 3 waves after a 5-wave move up, and that is rather suggesting upside trend continuation. I can just not rule out another low at this point and a test of the support area, which is between 42 cents and 62 cents. That should give you all the relevant levels. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.